Yeah, and one of the Manhattan's most coveted office buildings, meanwhile, could soon set a real estate record. Our partners over at the Wall Street Journal saying some of the bids are in on the General Motors building, and they topped, yes, $3 billion. A year ago, developer Harry Macalo used the Fifth Avenue skyscraper as collateral on a loan, but when he couldn't repay the loan by its February 9th due date this month, he put the building up for sale. If the top bid is accepted, it would be the highest price ever paid for a single building in the history of the United States of America. Maria.
And we get perspective on that story now and a look at whether now is the time to start getting into commercial real estate investment trusts or not. Lewis Taylor joining me, senior REIT analyst with Deutsche Bank Securities, and David Lichtenstein is chairman of the Lichtenstein Group. Gentlemen, good to have you on the program. Welcome.
Hi, good afternoon.
So let me get your gut feeling here about commercial real estate and whether or not it's going to follow residential real estate down. What do you think, Lewis?
Prices have already corrected about 15% versus the residential market, which is maybe down 0 to 15 depending on where you are. We don't see declines much further past that because there's just too much income support for the properties, and you didn't have the speculative froth that you had on the residential side.
David, what do you think?
Maria, I think you're safer giving your children to Britney Spears for childcare than buying an office REIT in New York City today.
Oh, come on. Isn't that a little aggressive here? But, I mean, what you're saying is that you just think that commercial real estate is going to plummet.
I think that New York City has a tremendous amount of layoffs coming.
Right.
The financial services industry, which is 40% of the economy here, is in the first inning. It's going to get really bloody out there. And when they start laying off people, and you have a lot of sublet market on the space, and you have a lot of vacancy, and don't forget the hedge funds. All those hedge funds are hiding lots and lots of subprime debt on their books. We're in the fifth inning with subprime, but we're in the first inning of hedge fund wreck, and probably the second inning with the bank wreck.
Wow.
And when they start laying off people, and suddenly there's a lot of vacant space, you're going to see a bloodbath in New York office prices.
Lewis, makes sense to me. What do you think?
Well, fortunately for people looking to invest in real estate, there's a lot of other places in the country to invest. You know, there's about 90 publicly traded real estate investment trusts that are not in New York. So if people are worried about New York, they got plenty of other options. In terms of layoffs in Manhattan, I mean, you could debate that one for hours. But, you know, I think there's some pretty good value in names like Vornado and SL Green, despite other views.
David, how come you see these bidders coming to the table then with some $3 billion to acquire the GM building?
I just think some people are a genius, but they figure it out a year too late. I think in a year from now, when you revisit these people, you'll be buying them cases of Kleenex.
So you just think they're flat out wrong?
I think they're wrong, and I think that, again, we're in the first inning in New York. I think it's not only the office market in New York, but a lot of people have always wanted to buy an apartment in New York. There are going to be a lot of opportunities in the next 6 months, because who drives up the New York prices? It's all the bonus babies from Wall Street. Well, those bonus babies, how big are their bonuses going to be? I just saw B of A, the bonuses were 0. When Lehman announces big write-offs, their bonuses have got to be hurt. When Merrill's taking $13 billion, where are their bonuses going to be? I mean, just go down. UBS, every single one of them is losing their shirts. They're not going to be giving bonuses. There's going to be lots of layoffs. A lot of those penthouses are going to be available. So the good news is, if you always wanted to own an apartment in New York and you could never afford it, now soon going to be the time to buy it.
Yeah, I also wonder what's happening in the UK, in Germany, because you're seeing real estate being bid up there as well. Final question for you, David, on this one. Let's say you're right, hypothetically speaking, and Lewis has it right in terms of valuation. How much of this, what you're saying, is already priced into these stocks? Because you may very well see values in some of these stocks, even though we are going to see business under pressure. Is the story already out there?
I think it's partially out there. I think Lewis is right that there is a certain floor based on earnings, but he's assuming two things. He's assuming that credit will stay strong. If the economy keeps on eroding, those profits are going to erode too. So that stock that suddenly looks so attractive because you're buying it at 11 times earnings, well, next year, maybe it's 15 times earnings. So that erosion has not hit us yet. And when that erosion hits, it's got to affect stock pricing.
All right. We will leave it there, gentlemen. Good to have you on the program. Thanks very much. We'll see you soon.